Stephen Carroll is here with me in the studio for a look through the day's top business news stories. Hi there, Stephen.
Hello, Catherine.
You're going to start off with European Central Bank announcements from them about Greece.
Of course, having all sorts of repercussions. What's important, I suppose, to take from this is a sort of a warning shot from the ECB to Greece's new government. The European Central Bank closed off a key financing tool for Greek banks, but it didn't cut emergency funding altogether. It's still allowing Greece's central bank to provide the necessary cash to prop up its lenders. It is a blow, though, to Greece's shaky financial sector and to the ambitions of the Athens government. Diptyka Laurent explains.
It seemed like a meeting that had gone well. Yanis Varoufakis was confident after his discussions with European Central Bank Chief Mario Draghi.
Mr. Draghi was particularly helpful in outlining the mechanism by which the European Central Bank supports the Eurozone member states, including Greece.
But just hours later, the bank withdrew some of that support. The ECB saying that starting next week, Greek government bonds or debt will no longer be accepted as collateral for loans to Greek banks. In a statement, it said that Greek banks can still apply for loans, but it must come from their national central bank through the emergency liquidity program. This comes at a higher rate, placing the liability for these loans on Athens itself. The ECB decision is seen as a clear message to Greece's new anti-austerity government, casting doubt on the efforts to renegotiate Athens' bailout deal, which expires at the end of the month. Emergency funding for Greek lenders is a key issue for Athens, as deposits have been pouring out of banks since before the election, leaving them short of ready cash. It's a race against the clock now for the new Greek government to convince their international lenders, the ECB, IMF and European Commission, to loosen their restrictions, which they say have crushed the Greek economy. Their next challenge, convincing Athens' toughest critic. Varoufakis will meet his counterpart in Berlin this Thursday.
And just this morning, we have been getting some more details, haven't we, Stephen, from the European Central Bank's officials?
Yeah, that's right. There's clearly some strategic communication going on from the ECB today in the wake of this decision. We've had the bank's chief economist, Peter Perret, speaking to the French newspaper Les Echos. He said the rules are clear when it comes to the use of bonds as collateral and that Greece isn't meeting those conditions. So, of course, that the bank would take this step. We've also been hearing from the president of Germany's Bundesbank, Jens Wiedmann, who's been warning that this alternative line of funding, the ELA, Emergency Liquidity Assistance, we've just been hearing about, that can only be used with solvent banks. And that's a very clear message there that Greece needs to watch out very carefully for how those banks will perform. Of course, there is this fear of a run on the banks today as they open. We'll find out more, of course, when we'll see the Athens markets open in about 15 minutes.
And in terms of market reaction, something that people are really focusing on is the borrowing costs for Greece.
Yeah, that's right. So if we look at Greece's benchmark borrowing cost, which is their 10-year bond yield, it peaked slightly above 10% earlier in trading today. It's just a little bit below that level. In fact, at the moment, just about 9.66%, as you can see, those figures coming from Bloomberg. Now, what's important about this is that completely prices Greece out of the market in terms of borrowing on the international markets. It has been like that for a long time. Anything above 7% is considered unsustainable for any economy to borrow at. Just reinforcing again how much Greece needs a deal with its international partners on funding, because it simply can't raise that money on the markets. On the currency markets, we had seen some reaction to this decision as well. The euro had fallen against the dollar by over 1% as this announcement happened. It's up slightly in trading today, but still below the level it was before the ECB took this pretty dramatic step.
And what about the stock markets?
Well, the European markets have just opened up, as I say. We have to wait a little bit longer to see what's going to happen in Athens. But this is the picture across the rest of the European markets, all opening in the red. Investors obviously worried about what's going to happen with Greece now. Market confidence is so central to this decision by the ECB. As I say, it doesn't cut the banks off entirely, but it really is a question of how the markets perceive that. There's some corporate deals moving around which are helping some shares into the positive, notably with BT in London, the telecoms firm, announcing they've bought the mobile network EE. Their shares are up, with a pretty negative picture across the board in Europe. Over in Asia, it was a fairly similar picture early on, but we've seen the Chinese markets, at least in Hong Kong, turning into positive territory. Chinese markets also dealing with a decision from their central bank on bank liquidity rules and bank asset reserve rules that had sent shares into positive territory earlier, but we've seen the Shanghai Composite turn again into negative later on in the trading session.
And we've just got time for a quick mention of the French bank BNP.
Yeah, that's right. They've reported slightly disappointing profit figures of 1.3 billion euros for the last 3 months of 2012. A big improvement for the bank, though, because last year, of course, they were being weighed down by the massive $8.9 billion settlement with US authorities over breaking sanctions. The bank saying that weak economic growth in Europe has hit its earnings and it doesn't expect the situation to get better anytime soon. On that positive note, Catherine.
On that positive note, thank you very much and have a great day. Stephen Carroll, our business editor there, rounding up the business news of this morning.